Good morning, it's Jeffrey Christian. It's about 10:30, not quite 10:30 in the morning here in New York on the 9th of August. I wanted to talk today, I'll give you a brief update on where I think the markets are going, but I wanted to talk about prepaid forwards. And that's perhaps a esoteric corner of the market, but I thought that it might be interesting. Prepaid forwards are one form of asset-backed lending that is used by the mining industry, and it has certain attractions over other forms of financing for mining companies, especially more established mining companies that have several mines. And also it's useful for companies that have byproducts because they can prepay for, they can raise capital upfront by selling prepaid forwards their byproduct metals. So CPM Group is working on one now for our client, and we thought it might be interesting to broader market. CPM in the past, some of our videos have addressed hedging and hedging strategies, and I think we've also talked about structured commodity notes for investors, sometimes with downside protection. This is a third type of structured commodity product that CPM Group works with for its customers. It's industrial producers, processors, industrial users, as well as investors, institutional and high net worth individual accredited investors. A little bit about the markets. Gold and silver are a little bit stronger than we had expected right now. Gold, I think, got up as high as 1817. And silver has gotten up to about 2070. The upper end of the ranges that we expected to see during August. Our expectation is that the prices probably will sort of top out around here and move lower over the next several trading days and really over the course of August. We're still looking at the doldrums of summer setting in during August. We have seen the dollar go back and forth. Right now, it's kind of stable today, but it has shown some weaknesses and it's also shown some strength. Interest rates have vacillated as people try to figure out whether or not the Fed will continue to raise interest rates. In the mainstream markets, the expectation has been that the Fed would continue to raise interest rates into the second quarter of next year. We've seen gold bugs and gold promoters talk about how the Fed would have to pivot any moment now and start lowering interest rates. That's probably not going to happen, given some of the strong economic indicators that we've been seeing in the market. You also have the issue of China's belligerence in the reaction to Nancy Pelosi's visiting Tehran, sort of backing off now, so that's a little bit less of a thing. So we see gold and silver on a short-term basis as sort of topping out with potential for somewhat lower prices over the next week or two, really through August. Talking about prepaid forwards, and you're going to excuse me, but I'm going to have to write notes. It's funny because we were talking about, well, do we really want to talk about this? Do we really want to explain this to people? And at first I thought, well, we'll keep it very superficial, and we won't go into all of the details of how prepaid forwards are structured and all. And I thought, well, do we really have a lot to say? And then it turns out that I have about 2.5 pages of notes. So why tell you about prepaid forwards? Well, I think first off, they speak to the ways that gold and silver trade, and they are used for other commodities, but most of the prepaid forwards that we've seen have been gold and silver transactions. It's why trading volumes exist, why those financial intermediaries exist to provide financing to miners and processors and users. And it speaks about some of the things that don't get discussed in more superficial commentary about the gold and silver markets, the mechanics of how these markets trade. It's like people will talk about how a car runs. Well, it has an engine and it burns gasoline and it goes forward. But then you can get into all sorts of issues about the fuel injection system and the pistons and everything else. And this is one of those things like the pistons and the fuel injector systems that don't get discussed in higher level, if you want to call them higher level, commentaries about the metals. Also, they're interesting, and they are an attractive alternative way to raise financing for mining companies. It's interesting, you know, in May, I met with Jim Lewis of Wall Street Silver, and we sat down. He been wanting to meet me for months. He had first approached me in the summer of 2021. And I said, you know, well, you guys make fun of me. You put up stupid cartoons, adolescent cartoons about me. When I point out that what you and your speakers are saying is inaccurate, you poo-poo what we say, even though it proves to be accurate. But you know, when we sat down, we said, let's have a constructive conversation in May in Vancouver. And we started by asking each other about each other's businesses. And he was very honest in explaining the business model of Wall Street Silver. And then he asked me how CPM Group makes its money, you know, who our clients were and what services we provided them. Now, there are a lot of trollish type people and true believers and just crazy people who keep thinking that we work with banks. And I explained to him, and he understood, that CPM Group works for investors and industrial companies. We don't really do a lot of work with bullion banks and trading companies. Less than 1% of our revenue comes from financial intermediaries like bullion banks and trading companies. And I explained why and how. And I explained how we basically have the job of transferring beneficial financial exposures from the bullion banks that provide financial services to investors, institutional investors, high net worth individuals, and industrial companies, to investors and industrial companies. So we work on the other side of the table, and we basically take what would be gravy off of the bullion bank's plate, and we put it on our client's plate. So I gave him some examples of like gold and silver index notes that we reprice. A bullion bank will say to institutional investors, here's a $500 million silver index note, and this is the structure and the price risk reward profile. Some of those institutions will come to CPM Group as our clients and say, Jeff, what do you think about this? We will structure an alternative that's more attractive to the institution. Say, go back to the bank and say, I really don't want that index note, but I would do this. The banks don't necessarily like that, you know. Similarly, when we do hedges, we will alternative structures to hedges that take the beneficial price appreciation exposure and transfer it back from the bullion banks to our clients as producers or as industrial users. Again, taking the gravy and giving it to our clients. So if you are a hedger and you want to, you need to hedge your exposure to the metals, you might do a forward and you give away all of the exposure to beneficial price developments. You might say, I'd like to have some, so the bank will propose a collar. And they might give you 10% of the upside exposure and take the rest themselves. What we do is we come along and say, well, let's work on a different kind of structure where we give the bank the 10% and we keep the other beneficial price exposure for our clients. And then a gold prepaid forward. I gave him an example of a prepaid forward, financial and operational advantages to a mining company of using a prepaid forward as opposed to something else. So how are mining companies funded? Well, equity, debt, and then asset-backed lending, structured finance. Some of that's gold loans. If you are a large enough mining company, preferably with several mines, you might borrow gold instead of money, have the bullion bank sell that gold for you, take the proceeds, develop a new mine, and then repay that loan in gold rather than dollars. And you can do that at a much lower interest rate, gold interest rate, rather than a dollar interest rate. There are streaming deals where you will give up a percentage of your output in perpetuity for the life of the mine, in return for which you will basically be prepaid for selling forward future production. And then there are prepaid forwards. Now, a prepaid forward is an alternative tool for raising money. Here is some very high-level type of stuff. We're not going to give you away all of our details. But basically what you'll do if you are a mining company that qualifies for something like this is you will sell a small percentage of future production, typically less than 10%. The current project that we're working on is less than 5% of future production. It might have a tenor of 3 to 7 years. I've seen them go out to 10 years. 3 to 7 years is probably more common. The principal to transaction, the terms and conditions and the interest rate you pay are all contingent upon the creditworthiness and financial conditions of the producer doing the loan. But you can say, okay, I need to raise, in this case, I think we put it at $3 million, relatively small loan, prepaid forward. Can raise $3 million through a prepaid forward, and I'll give up less than 5% of my future production over the next 3 years. It's a total of 183 ounces, 83,000 ounces over 3 years, which is, again, less than 5%. And I will get a discounted price to the forward price in exchange for getting paid for that forward today rather than as I deliver. In a typical forward, the producer will have an agreement with a financial intermediary, bullion bank or trading company, and they'll say, as we want to lock in a price, and as we deliver metal or concentrates or doré or refined metal to you, we will take that future price. That's a forward price or a future price. In a prepaid forward, and you will pay us at that time. In a prepaid forward, you say, I would like to be paid today for metal I will deliver you tomorrow, sort of like Wimpy and Popeye. And you can typically fix it for 3 to 7 years. It's principal. And you can take a portion of your production and in some cases lower your financing costs. Kind of easy. You can see here, this is a 3-year loan. There's a forward price. You're going to get a discount to that forward price, which is going to represent basically the cost of money and the risks inherent in paying you today for silver, in this case, that I hope to receive from you tomorrow. That's sort of how it goes. Now, many trading companies prefer to have physical payback. So I will give you the money today, and I want your metal, whether it's in concentrate or doré or refined form. Sometimes a producer will have refining and or other smelting and refining arrangements set up, and they will have a financially settled prepaid forward. So you'll give me the money today. We will agree about what the value of future production is going to be, but we're not going to give you the future production. We're going to give you the dollar value of it at that time. Oh, yeah, at that time. You can then take that cash payment and you can buy physical metal if you really want it, or we will even arrange it. Yeah. There are a lot of advantages for producers. It's a fixed number of ounces over a fixed period of time for repayment. It's not a certain percentage of your future production, regardless of how much your production grows or for the entire life of the mine. And for the counterparty, it's future metal or metal price exposure at a discounted price, usually at an attractive interest rate. Sometimes CPM Group further complicates it and we get fancy. We might buy calls for the producer to give it upside exposure, even for its relatively small portion of its production that it is using in its prepaid forward. And we can also put in some puts to give the investor downside protection. that if the price falls below the price, the investor is still going to get that price. There are a lot of risks. There are performance risks, there are production risks, management risks, geologic risks, political risks, all of the other risks in financing mines, whether you finance them through equity or debt or structured investments, exist there. So these are not for unsophisticated investors or small investors. We only work with accredited investors in working on these kinds of projects. But even within the realm of accredited investors, these are for very sophisticated investors and for very sophisticated dealers and mining companies as well. You know, we had a bank, a major bank, which no longer exists, not because of this, but for other reasons. In the 1980s, there were a lot of gold loans for project financing being done. And those gold loans typically, you know, the more experienced banks only offered such financing arrangements to multi-mine established mining companies with well-established and healthy balance sheets. But this one bank decided to get into the gold loan business and was offering gold loans for project financing purposes to startup mining companies with only one mine that was under development. You want a multi-mine company so that if something goes wrong with your development, you can pay your gold loan back with production from other mines. But if you're a startup company and maybe you have less than fully experienced management, and you're running all those kinds of risks about starting a mine in a remote location, you can have a lot of danger. And this company got into not only gold loans for project financing with mining companies, but they were doing commodities trade financing across all sorts of commodities, agricultural, energy, and metals. And they went bust. They went bust not because of losses. They had losses in their commodities business, but they had losses, bigger losses elsewhere. Bad management on the part of that company. So these are really for sophisticated dealers, banks, producers, and investors. One last point. They're not, prepaid forwards are not to be confused in any way with the common scams that many smaller investors are approached with, in which somebody says, well, I've got gold and silver in the ground, and if you can buy it for, you know, cents on the dollar, and when we develop this imaginary mine, we will give you the gold and silver. That's not a prepaid forward at all. That is a scam, and it's night and day. I can't use other things. Wrapping up, we'll be at the Silver Symposium at the end of this month. We will give a speech on the real silver market. We'll have an open forum where people can ask us questions like, you know, how is it that you don't actually work for bullion banks when all those people on the internet insist that you do? And then we're going to have this evening presentation where we'll have Matthew Hunter and Bob Coleman joining us, and we'll be talking about the evidence for and against silver market conspiracy theories. You should be there. It's going to be very interesting and a lot of fun. If you want to plug into real research, not marketing stuff, you can buy our gold, silver, or platinum group yearbooks. They're $160 each. They're available as ebooks on our website. You can plug into our retail investor programs. You can learn about them on our website too and see other things. That's all I have now. We'll talk to you Friday, and perhaps I'll talk about something that's slightly less esoteric than prepaid forwards. Take care.